Hello, and welcome to the Legislative Report. I'm State Representative Kate Harper of the 61st District in Montgomery County. It's a fact that the cost of education continues to rise in large part due to the unfunded liability of our pension system. Many have advocated for a severance tax on natural gas drilling as one way to reduce the debt that is owed in the system. While I appreciate that a balance must be achieved between generating new revenue and keeping the industry profitable, I do believe it's possible to achieve that balance. And I've sponsored House Bill 82, which would add a 3.5% severance tax while leaving the current impact fee in place in order to continue protecting the local communities and funding statewide environmental programs. The new dollars would go toward the public employees' retirement system to reduce pension debt, alleviating budget pressure at both the state and school board levels. So I recently shared my plan with the House Environmental, Energy, and Resources Committee, and I'd like to share portions of that hearing with you now.
Today's undertaking is an informational meeting concerning the subject of severance taxes on natural gas. It's a subject that's had some conversation in the media and in various political undertakings over the recent years, side by side with what some would say is a severance tax, the current impact fee. The object of today's meeting is to gain some understanding of the severance taxes, and which is a more complicated subject than it might at first sound like. The first proposal that we'll gain some knowledge about is Representative Harper's proposal.
Thank you, Mr. Chairman, and members of the committee for coming this morning to listen to me and find out about House Bill 82, which is sitting in your committee. It would levy a Marcellus Shale natural gas severance tax while retaining the existing impact fee. When in the course of human events it becomes necessary right, very familiar, to consider new or increased sources of revenue to balance the Commonwealth's budget, and I do believe we are in one of those times, we want to make sure we do it correctly. The need for new revenues is not something that I take lightly, but it can be understood as the logical effect of rising costs in our biggest budget items, while the sluggish economy in the worst recession since the Great Depression means that sales and income taxes that we already levy just can't keep up. We spend 40% of our state budget on education. Most of that is K through 12, a little bit for things like community colleges and other college expenses, but most of it's K through 12. So as the costs of the education system, primarily salaries, pensions, and other benefits, tend to rise over time, just meeting expenses year after year strains the budget. Add that to the fact that another 40% of our budget goes through health and human services, and an awful lot of that is nursing and doctor care and nursing home care for seniors on fixed income through Medicaid. And that has also increased in expense every year and continues to go up. So now you can understand why, with 80% of our budget rising, without much we can do to control those costs, the whole budget must rise to balance. And that's why I believe that any budget discussion at this time must include a discussion of the severance tax. And I think most Pennsylvanians understand this and are prepared for it, as are the energy companies. However, if we're going to debate any severance tax proposals, I believe that it needs to have two guiding principles. Number one, the rate must be reasonable so that we are still competitive with our neighboring states that produce gas. And number two, it must maintain the current impact fee and its distribution of revenues to the local communities impacted by the fracking and the environmental programs statewide that exist to mitigate the harmful effects of a heavy industrial land use in our environment in the Commonwealth. To that end, I drafted House Bill 82 with bipartisan support that retains the existing impact fee and its current distribution of funding and adds to it a 3.5% natural gas severance tax on unconventional gas wells, with the new money being directed toward the Public School Employees Retirement Fund, or pensions, for the purpose of reducing the accrued unfunded liabilities in that fund, because the accrued unfunded liabilities in that fund are driving up costs both at the state level and at the local school board level. The existing Act 13 impact fee is distributed first to local communities, helps them deal with the impacts of the drilling and the fracking industries in their communities by giving them money for costs like infrastructure, emergency preparedness, housing, and environmental programs in the local communities. The money is sorely needed and much appreciated, as this recent cover story in the Township News magazine points out. The natural gas impact fee brings hope to struggling townships. The impact fee goes first to these communities, and I believe it should continue to go there. What many people don't realize, though, is that the existing Act 13 impact fee also provides steady, dedicated sources of funding for statewide environmental programs like the Environmental Stewardship Fund, used for popular Growing Greener projects, the Hazardous Sites Cleanup Fund, which in my experience here has always struggled to get funding, conservation districts, PEMA, DEP, and the Commonwealth Financing Authority. And it goes for projects that deal with acid mine drainage, orphaned and abandoned oil and gas wells, watershed projects, water quality programs, open space, and other statewide programs, as well as grants for counties like my own, which don't have a single well. I think of that money as statewide environmental mitigation and restoration funding, and I think it should remain in place. At the same time, charging a severance tax that is competitive with other gas-producing states is both fair and should not be seen as a discouragement to the natural gas industry, which is really helping the economy of many of the communities benefited by the fees, and also the Commonwealth as a whole is benefiting by the natural gas industry. This new money that I'm proposing from the severance tax is not a panacea for the Commonwealth's budgetary woes. The price of natural gas has dropped so low that a number of drillers have already left the Commonwealth, and the new wells in Pennsylvania, the number of new wells in Pennsylvania has dropped dramatically. As this Sunday Inquirer article points out, it's got a good headline, "Chill in Pennsylvania fracking, the drill is gone." It points out that because of the low price for natural gas, that it's not being drilled or produced in as great quantities as earlier in the boom from natural gas. So a severance tax on fewer producing wells is just not going to produce billions of dollars. It's just not. So because 3.5% of nothing is nothing, but it is still producing, so there would be some. On the other hand, a fair, reasonable, competitive severance tax added to the impact fee could produce hundreds of millions of dollars, even in a down cycle for the industry, and would produce more, of course, when the industry recovers and produces more gas. So House Bill 82, which, if not the solution, should certainly be part of any discussion of a severance tax in Pennsylvania, does meet the criteria I set forth as being important in this discussion. It is reasonably competitive with our neighboring states, and it keeps the existing impact fee and its distribution in place to benefit the local communities that are impacted by the drilling, and also the statewide environmental programs with dedicated funding. So I would hope that you would consider it as the Environmental Committee as the discussion goes on. as to whether or not Pennsylvania should enact a severance tax. Thank you so much for listening.
Leading off, and with all due decorum, will be the Democratic chair of this committee, Representative Greg Vitale.
Thank you, Mr. Chairman. With regard to the piggybacking of the impact fee, I think we need to get out on the table. This is really politics, not good public policy, because the impact fee, in my mind, bears no relationship between the money received by these communities, bears no relationship between the impact they suffer or the needs they have. It's simply a mechanical formula that doesn't take into account how much is given each year or what communities need more. It's just all politics. I think a better way to approach this would be to have a competitive grant program setting a certain amount for these communities based on their needs and based on the actual impact. So I think my first suggestion to you guys is that piggybacking on the impact fee might be good politics, might be the way to get it done, but it's bad policy from a revenue distribution perspective. I think the second point I'd like to make with regard to this is that I think the most logical way to distribute the revenue is to put it right into the general fund, like we do with the sales tax, like we do with the income tax, like we do with the corporate net income tax. I think we have this huge structural deficit. I think we definitely need more monies coming in. I think that we as a legislature each year should assess, based on what our revenues are, how we want to distribute them each year. So rather than giving them to this fund or pensions or whatever we're giving them to, put them right into the general fund every year. I think that's the reasonable way to approach this. I just wanted to comment on the Inquirer article you held up. If I read that correctly, I think what it's saying is that production is pretty steady. It may be that they're not drilling new rigs, but they have enough rigs that are already producing gas that you do have a steady flow of gas. And also, I think if you look at the revenue figures for these large companies like Anadarko and Chesapeake and so forth, you will be seeing huge profitabilities from these companies. So again, thank you, and I hope this hearing is some indication that we are actually seriously considering a severance tax for this budget cycle, because I think it's fair and it's needed. Thank you.
Mr. Chairman, may I respond on one point?
Please.
It's not true that the impact fee bears no relationship to the communities that are getting it. In fact, it's based on the number of drilling wells and the impacts from it. So it actually has a rough correlation. If you have a lot of drilling activity, which is actually a lot more activity above the ground than producing it after the wells have been drilled, you're going to need things like new roads, new bridges, and to protect your creeks and streams. So it's not true that there's no relationship between the amount of drilling activity and the needs of the communities. The idea behind the impact fee was to help mitigate those needs. And so I think it does that.
Representative Bloom.
Thank you, Mr. Chairman. A question, I guess, directed primarily at Representative Harper, trying to figure out what would be the effective rate of your new tax proposal when combined with the existing impact tax or impact fee, which we know now is roughly at the current gas price about 5%. It's about at a 5% rate given gross revenue, or about a 12.5% rate when you're looking at revenue less some of the gathering costs. So I'm trying to figure this out, how this would layer on top of the existing impact tax, which is already bringing in about $250 million a year. In the aggregate, I'm thinking that at today's natural gas prices, your proposal, the layering on this 3.5% tax in addition to the impact fee, would bring our effective rate up to something on the order of 8.5% or even as high as 15.5%, somewhere in that range. And my question really is, how does that compare, if I'm correct in my analysis, how does that compare to the effective rates we see in Ohio, West Virginia, and other states that have competitive natural gas resources?
Okay?
It's a question.
Just didn't want to interrupt you.
Thank you.
Sure. The bill is designed to be an effective rate of about 5%. However, because the impact fee occurs whether or not the price of gas is high
Right.
or low, it actually, this year, because the price is so abnormally low, is a higher rate. But remember that the fee is also designed to go down over time and has a sliding scale. So you'd actually have to do a much more in-depth analysis than either you or I are capable of to come up with the effective rate. It's designed to be 5%, and that comports with West Virginia, who's one of our closest competitors. Not sure about Ohio, and the reason I'm not sure about Ohio is that it seems that they've been discussing doubling it and then halving it, and I'm not exactly sure where they are at the moment. But because the fees are generated differently, in other words, when the price of gas increases, the severance tax will increase because at 3.5% of whatever the price is, it's going to go up. Where you and I absolutely agree, however, is at the current rates, with this bill, it's going to produce a couple $100 million. Now, is a couple $100 million a big number in our $30 billion budget? Well, I don't know, a couple $100 million here, a couple $100 million there, pretty soon you're talking real money. So I do think it's worth doing it this year, even if it will show a greater result in future years. And I don't think, because the drillers have already factored this in to their projections on what they're doing, I don't think it's going to discourage the industry. And certainly the biggest discouragement to the industry are the low natural gas prices, which are somewhat beyond the Pennsylvania General Assembly's control.
Thank you, but it could put our rates then higher than the rates in some of our neighboring states, the effective rates.
It could if they only have a severance tax based on the price and don't have one based on the drilling.
Okay.
But
you.
remember, the impact fee was meant to be based on the number of drilling rigs because, as I said to Representative Vitale, the point was to mitigate the impacts of the drilling activity. I mean, once the drills are in and the gas is being produced, it's not producing that much of an impact either.
Okay. Thank you. Thank you, Mr. Chairman.
Thank you, Representative Bloom. Representative Christiana.
Thank you for your commitments to the funding distribution formula under the impact fee, and for areas like mine that do see a significant increase in our cost that is, very easy to identify, being connected with the natural gas industry. And I think that is very, very respectable on your parts for being outside the area to understand the impacts and to maybe do it in a different way, but to protect that in both your proposals. So thank you for that. I have one question for each, if I may. Chair Lady Harper, about competitiveness. I think we all want to strike a balance between hitting putting a reasonable and competitive proposal before the governor. But how we each define reasonable and competitive, I think will be very different. I think when you mention competitive, I think you were looking at a tax rate versus what other states' tax rates would be, correct?
Correct.
And for me, when we look at even our homegrown companies that are here and producing natural gas, they are paying a corporate net income tax rate of 9.9, where maybe Texas has an extraction tax of 5%, like what we are talking about today, but they don't pay a corporate net income tax in Texas. And then also there's a significant financial implication to these companies for the regulations that we put in place. And when we did Act 13, we increased regulations tremendously. Our permitting fees are one of the highest in the nation. Our setback requirements, our restrictions of where companies can drill are one of the highest in the nation. Our bonding rate is one of the highest in the nation, all adding to the cost of doing business here in Pennsylvania. My question to you is, by leaving the impact fee in place, which, as we've mentioned, it's erratic, the rate, plus the severance tax rate, combined with all those other additional costs, do you believe that we will be uncompetitive when factoring all those other factors as well?
No, I think competitiveness has many factors to be considered, and I specifically wanted Pennsylvania to remain competitive because I believe the natural gas industry is a good thing for Pennsylvania's economy and for jobs, particularly in the rural areas, but actually all over the state. So I tried to peg my proposal at a rate that I thought would keep us competitive. Now, I risk getting swatted down by the chairman here since he's a certified public accountant, but it is my understanding that state taxes are deductible on your federal return. And in that event, and I know that the chairman would say they have to be making money to actually owe the tax, and I get that. But in that event, if they are making money, and this is a deduction off their federal return, they're almost already paying those taxes that you talked about, and they've calculated that it's worth it to do it. One reason that we are not Texas, among the many you mentioned, is that we're the Keystone State. We are located next to great markets. Up and down the East Coast, and particularly into New England, they need fuel for heating and other things and manufacturing. We also have a huge amount of population that can use natural gas right here, and markets, and if we can get it to Marcus Hook and out to the port of Philadelphia, we can actually export it. So I think Pennsylvania will always have a certain competitive advantage above and beyond any taxes because of its location.
Well, first, a real short question, just to clarify this. I'm reading from the descriptions here. Both of your bills apply the tax specifically to unconventional drilling. Is that correct?
Correct.
Okay. What I want to follow up with this is that, right now, we've discussed we have the impact fee, and this is an assessment. It's a set amount that the producers are paying to the communities for the impacts they have, and with that fee, considering the scale, how big these a non-conventional drilling is, there are certainly impacts. Those of us who are in the drilling area see those in our communities. But one thing made me think about, and I know both of you come from a legal background, and one issue I've dealt with for years up here is property tax relief, and I'll bring this back in half a second. But every time we try to do relief, we always, for homeowners, we always run into a question of how we do this with the uniformity clause. And my concern, I guess, is if you're taxing, if you're doing production-based or value-based tax, how do we deal with that and separate that out when we're taxing one type of drilling and not another type and get through? And again, I'm not suggesting that we should be taxing conventional drilling as well, because certainly the profit margins there, are fairly slim, and to make that more difficult could certainly be a big problem for them. But how do you, and again, I'm not looking for a full legal opinion, but do you account for that in this, and do you think that could be an issue when we try to do this on a value-based tax?
Sure. Again, I'm not really a fan of the impact fee because I think it hurts property owners. And so I would say you would just add conventional wells and unconventional wells, tax them the same way. To me, that's just a more logical manner. We left money on the table when the price was high, and right now drillers are really feeling the impact, and we're losing jobs. So I just think a severance tax based upon it's easier to plan in your pricing of your products. So I would just add them if that was actually a problem.
Right. I would disagree that it's not easier to plan, because the impact fee, while it is a fixed fee, which makes it when prices are low, high, and when prices are high, low, it's clearly laid out in the legislation, and any reasonable drilling company or natural gas or energy company would have factored that all in, as well as factoring in the possibility that Pennsylvania may enact a severance tax. I really don't think that's what's driving the drillers out. What's driving the drillers out is the international market and the low gas prices.
Representative McKenzie.
Thank you, Mr. Chairman. And as a member of the legislature who was not here when we debated Act 13, I really do welcome the opportunity to debate and discuss the policy and rates of taxation surrounding the natural gas industry here in Pennsylvania. So again, thank the chair for calling this hearing today. And when I'm looking at these decisions and the policy around natural gas in Pennsylvania. It's not only an economic development decision, but also one about our environmental protection here in Pennsylvania, and as well the budgetary impacts that we're talking about from the taxation. So one of the hot topics is always around the amount of revenue that would be generated from such policies and taxation. Do you have estimates, either of you, as to what would have been generated from your policy, even, let's say in this last year as compared to the impact fee?
Well, I can answer that. I have a rough guess number of $200 million to $300 million, and that's based on the price. Because if you go with the severance tax, it's a percent, and it's certainly not the $1 billion that Governor Wolf was looking for or estimated. He was like way off on that. Okay, so I think it's a couple $100 million.
And that's $200 to $300 million additional in revenue?
Yes, above the impact fee, because that would be the new money.
One of the things I think we've been stating today is that if we're actually maintaining the same volume of gas production, that seems to be the case at the present moment, and yet we're cutting down on a number of wells that we're drilling this from. That seems to be the case then, that really the efficiency of the drilling techniques that are being used are responsible for maintaining the same volume, so that when we talk about job loss, it's not that we're losing jobs because of lower production. We're losing jobs because of greater efficiency. Would you agree with that?
I would not. I think the guys from rural Pennsylvania can easily attest to the fact that the economic activity of drilling new wells is pretty much died down substantially. I would not say it's greater efficiency. I would say it's the low price of gas. If it costs you too much to produce the gas and then sell it, it's not worth drilling a new well.
Another representative talked about the wind industry using this money for wind. A study was just done on the impact of wind turbines, and there are significant impacts to the environment from wind as well, especially when it involves birds, bats, and the significant footprint of wind turbines in this state. So I don't think that this industry should be getting off scot-free as far as regulations, and right now they're only regulated by the municipalities. They're moving dirt, they're doing roads all the time, but they have completely escaped most of the regulations.
I just want to say that my bill deals only with unconventional wells, and the definition is the same as existing law. So there's not any dispute that it's only unconventional wells in my bill.
Thank you very much. Representative Tallman.
I'm going to ask you a quick, easy question, and you're saying it has no, your bill has no impact at all on the, I'm going to call it tax because I called it a tax when we debated on the House floor.
Correct.
The impact tax. So Adams and Cumberland County, which we get hundreds of thousands of dollars from that to our conservation district, that's not impacted. We're not part of the drilling.
Correct. In fact, I specifically reserve it. In other words, I put my severance tax on top of it, and the distribution of the impact fee stays exactly as it is today.
I appreciate the thoughtful questions and comments from members of the committee. I very much applaud Representative Petrie and Representative Harper, and I would say Representative Harper is probably the pioneer on the severance tax subject. And
Been in your committee a long time.
This certainly won't be the last word on the question. Thank you very much. We are adjourned.
You've been watching a hearing of the House Environmental Resources and Energy Committee on the topic of a natural gas severance tax. If you have questions about what you've seen, feel free to contact me at my local office or through my website. That information will be shown in just a moment. Thanks for watching. Please join me again for Legislative Report.